Sunday, the 16th of August 2020. It's been a fairly eventful week in the gold market, and I thought I'd just do a bit of an update on some of my thoughts on the gold price and some of the action in gold equities as well. So I guess we started off the week with that burst still above 2000, or the last couple of weeks we've been above 2000. Market was starting to show signs of toppiness, reading more and more articles about gold, and I guess when you see that break of a trend and then it starts to go sort of a little bit more vertical, tends to be at the point at which you're nearish to a short-term top. And I think we saw a huge drop on Tuesday and Wednesday, I think it was, down sort of 80 to 100 bucks, and then further down, and then a little bit of buying support coming in. So it was fairly expected, I think, with the way the market's behaved. And then I'm reading some of these sort of articles and kind of almost parading as if this is the end of the gold move, and I just don't believe that, or it doesn't feel like we're anywhere near a top in gold and gold equities. That this action is the start of something, called we're at least in the middle of the game rather than the end. If you remember, I think in the maybe last year, I talked about, and a few other people have been talking about this, and some people my thoughts align with pretty well in terms of the maturity of this bull market, what stage we're at. And often they talk about it in baseball terms, a 9-inning game. And I think last year we talked, when we sort of broke above this long-term resistance level at about 1350, 1400. And I think that was the point at which we entered sort of the third or fourth innings of this game, where the market could start moving higher and get sort of, there's more bullishness probably particularly from people who have been in the market for a while. So people who are still gold, generally people who follow the gold stocks a lot and the gold price. And I think now we're starting to see generalist money, so where people are starting to cotton on that things maybe are not great in terms of economics, US economy, world economies, inflation, these sort of fears. And I think we're starting to get into a kind of the fifth innings of the game now, where more and more interest. And I'll talk about that in a bit as well, with some interesting news. But I guess the price action this week, seeing that sort of short-term topping action, tends to be an indication of at least some sideways movement for a while. And I was looking just back at the chart previously, that this 2009, 2010, 2011 bull market. And if you see some of the sort of short-term moves there, when you have these big sort of moves unimpeded, or, even this is probably not as sharp as what we've had now, but you tend to see these quite large sell-offs to every so often. So particularly this one here, probably toward the end of 2009, you can see there, gold goes to sort of 1220, falls 100 bucks within a week, so 10% down move, and then consolidates sideways for 3 or 4 months there. So I think there's a good chance we see something like that again. Every one of these sort of the end of a move tends to be this sharp pullback and then consolidation. Of course, then when we had the ultimate high, it was very similar. It was lower and then consolidation before the end of that trend and the bear market that followed. But I don't see any signs in terms of economically that we're anywhere near the end of this game. And I think ultimately that's what matters for the gold price. So I'm still of the mind that we're nowhere near the end of this, and that generalist money is nowhere. I think this is a key point. The people who say this stuff about the gold market's topping out, everyone's talking about gold. Well, these days everyone's talking about everything, and this is a point that I think needs to be sort of, if you read stuff like Twitter, or especially people tend to read, they get their news sort of concentrated from sources that they agree with, or so if you read articles about gold, you're going to see a lot of articles about gold. So then if you're seeing a lot of articles about gold, that doesn't necessarily mean that it's the top in the market. And just because you read a lot of that information doesn't mean that everyone else is. And I think this is a key point, because gold is nowhere near what it has been in the past. There's various pieces of charts on this. one, for example, I mean, there's charts that show gold, equities, and physical gold as a proportion of all financial assets. Not only are we not near the tops of what that has been historically, we're way below average. So I think I can't remember what the exact number is, but we're sort of half of what the historical average is in terms of the performance, the ownership of gold assets as a percentage of all financial assets is historically way below what it has been. And here, even if you use something like the GDX as an analog and look at the flows, does this look like a bull market in terms of, I mean, I think ETFs, and I've made this point a few times before in some of the ETF discussions, if this bull market really takes off, the money that comes into GDX and the GDXJ and other gold passive investments is going to be off the chart. And at the moment, we've seen none of that. We saw a little bit of action in April and May where we had good creation of GDX units in that period. But since then, it's been nowhere. There's been no generalist money coming into this space. And the GDXJ chart is even worse. I think in the last 12 months, there's been there's been outflows out of the GDXJ, despite the fact that the GDXJ is up, like 100% in that time. So there's generalists aren't in this market, and anyone who says they are just isn't real, is usually not backing that up with any facts. And the thing that says, oh, I've read a lot of articles about gold, yeah, maybe in the short term you have, but it is not historically highly owned, and where economically this market is, we're reaching a precipice. I feel more than this is not the end of the journey for gold. The economy is really teetering, so you'd think that would be positive for gold as or at least relative to other assets. If things roll over, that the gold market will keep going higher in relative terms at least. So I find that sort of people who say, oh, these articles about gold, that must be a top. Maybe it's a short-term top, but this is no indication that this is anyway a longer-term top here after just 12 to 18 months of sort of bullish action. So that was one point, and I think it's important to sort of anyone who says that, you can quite easily refute it with some pretty good facts, comparing it to historical multiples. But I think the odds are that we're due for some consolidation here for a few months. I don't know. We've got the election coming up in November in America. Whether that is negative for the stock market. We've also seen a correlation between the stock market and gold in the last 3 to 4 months. So gold has been rallying with the stock market, and probably even more so rallying with the Nasdaq and sort of these, I guess, high beta, high volatility names. So it's it might be. It could be possible that the gold falls with the stock market if it falls on fears of Biden, causing corporate taxes to go up or these sort of things. I think that's possible that gold falls with equities. It's mainly because everyone's getting out of negative yielding assets, moving it to somewhere else, whether that be equities or gold. And that's partly what's happening here, I think, in terms of that correlation. So we're seeing historically, generally, gold and equities don't move in the same direction most of the time, but in times when markets are everything's being devalued by monetary sort of inflation, at least, even if it's not reflected in consumer price inflation, that monetary inflation will be reflected in all financial assets, whether it be gold or equities. But I think that's something that we're probably likely to see going forward. So again, I don't think we're at the end of this rally in gold at all, and I think we can go significantly higher here if we get that flow of money coming into to gold equities. I mean, the ETF for physical gold, GLD and these sort of things are seeing big inflows, but it's certainly not being reflected in mining stocks. And even if you look at something like the GDX chart, again, it's nowhere near where it was back in 2010, 2011. We're still way below those levels, and I think we can go significantly higher than previous highs when this market's fully matured. But obviously GDX had a pretty big fall this week with that gold price fall back, so fell sort of 10 to 12% there, and perhaps needs to go a little bit sideways. But really the GDX and the GDXJ have been underperforming where they could be If you extrapolate out the improvement in cash flows that these gold companies are going to have from $1,900 gold versus where it was, even in this period here when the gold price was 1,600 or 1,600, you'd expect gold equities to probably have gone a lot more than 40 to 50% up, uh, considering such a huge move in the gold price. So the equities there's still not money flowing into these things like I showed the GDX inflows. People are still, it's kind of a climbing a wall of worry. People aren't convinced of this, which is another reason why I don't think we're anywhere near the end of it, end of this move in the gold price and in gold equities. Obviously, the other interesting piece of news was this one here, and this came out yesterday morning Australian time or Friday evening, with some release of filings to the regulator that Warren Buffett's bought shares in Barrick Gold Corp. Uh, I'm not someone who follows Buffett all the time, and I don't agree with what he says sometimes. Obviously, he's a very smart guy, and and I agree with a lot of the things he says. If they're quite sensible often. What's interesting about this, of course, is that he hates gold. Historically, Warren Buffett has made lots of negative comments about gold, and this is just a few that I found just with a brief Google. This first one here is probably the one you hear about. It's dug out of the ground someplace. We melt it down, put it in another hole. It has no utility. Anyone watching from Mars would be scratching their head. The problem with commodities is that you're betting on what someone else would pay for them. Um, what motivates gold is that they believe that the ranks of the fearful will grow. All this sort of stuff is extremely negative, and it's someone who detests gold. It's not just a slight dislike for it. He doesn't agree with the concept of it really, in that he doesn't think of it as an investment. He thinks it's a fear sort of speculative asset. Now, obviously, he's bought shares in Barrick Gold Corp, not hasn't bought physical bullion, but the two in my mind, are completely really related here. I mean, Barrick Gold Corp, I think I read something that said, oh, maybe he thinks Barrick Gold Corp is a good company, and he buys the best companies. Barrick has been a terribly run company for quite a long time. If you listen to anyone in the gold space, they've been derided as a poorly run company. So it's not that they're a well run company. It's just that it's the only gold stock that really can probably get enough liquidity to buy shares in it. Everything else is too small, and this goes back to I think the analogy is, the Hoover, when generalist money wants to come into the gold space, it's going to be like the contents of Hoover Dam going through a garden hose, right? Like there's such a small market that if big investors, generalists and generalist funds want to come into this space, there's just very few places for the money to go. So the good companies are going to surge in price, and I think this is a filing from a couple of months ago. So I mean, I read a lot of stuff about this yesterday, quite a few interesting takes, and I mean, this guy, I see him on Twitter a lot. I don't agree with a lot of the things he has to say, and again, I think he misses the mark with this comment. This guy's got about 60,000 followers. I'm not entirely sure why that is, but there are probably a dozen reasons to own gold. Warren Buffett buying 0.5% of his portfolio in Barrick is not in the top 12. I mean, this kind of misses the point. Obviously, a lot of people don't just follow what Warren Buffett does, but then a lot of people do. So gold investors are thinking that if Buffett's coming into this market, it's a sign that others might be thinking in the same way. It's about generalist money coming into this, particularly from someone who's historically been extremely negative on the gold space. And I realize that's about gold itself, but I think it extends to mining companies. He's rarely owned mining companies, and value investors of this type generally make disparaging remarks against commodity companies, that they're just betting on speculative prices. They don't have any control over the price of what they sell. They're price takers, not price makers. All these quotes, most of them stem back to Buffett somewhere, right? So the fact that he's doing it means something in a sort of a generalist money might come into this. It's not necessarily about people following what he does, but it's about people like him thinking. Maybe they need to start thinking about, they're questioning the whole paradigm of money printing, and that the other interesting thing in here was that Buffett sold a lot of his stocks in bank stocks, and and historically he's made comments about never bet against America, these sort of things, and even in that selection of quotes there, he's talking about Wells Fargo. He'd be happy to own Wells Fargo because they'll be making a lot of money. He's been selling bank stocks, he's been selling Goldman, he's been selling Wells Fargo. This is a sign that he thinks there's real issues here, systemic issues. And I've seen recent interviews as well, some quotes from I think the Berkshire AGM where they're sort of going through this stuff, talking about how he's really questioning whether this printing money and whether this is sustainable. This is not something that he's really delved into a lot in the past. So I think this is quite interesting in that sense. But like I said, I think this misses the point that people like him coming into this is a big deal. Not because of the amount of money that he's got in the market. Obviously, it's a small amount of the portfolio, but the fact that he's going against what he said historically and making a bet on this market, and it is a bet on the gold price because it's not about Barrick being a tier one company in any sense and compared to any other industry. It is about the gold price. This has to be a bet on the gold price as well. So I thought that was I saw a lot of talk about this yesterday, and it's it's something that I just wanted to get my thoughts on the video. The other thing that I've been one of the patrons asked me a question about this as well, and reading a lot of stuff about, and I guess it kind of relates to this GDX chart and climbing a wall of worry. A lot of the people who are in the gold equities, I think, are unconvinced about the how long this bull market's going to go, and this is probably why it's been grinding higher rather than really taking off. People are getting chopped out in the market, just getting hit, stop losses hit, and trading this market. And I don't think this is a trading market. And I've traded a lot of the gold equities in that sort of from 2015 to 2018. That was what I was doing. I was buying Perseus Mining shares at 35 cents and selling them at 45 kind of thing for a long time. That was the trade. There was trading this range from this sort of these lows here, selling it here, and then rinsing and repeating 6-12 months later and following production data. But when I sort of thought last year, when I thought the market really broke out, this is not a time to be trading a lot of these stocks. And I've said that before, that I moved into a few more what I thought were good medium-term holds, say 12, 18 months, that I thought were probably not going to have as many production issues and could ride this bull market. And it's hard to do because I was used to that. I've been conditioned to that environment of trading these stocks. And I think a lot of gold equities traders are still in that position where they're non-believers. They've been shaken out so many times, been hurt by this really long, sort of painful bear market in gold juniors that lasted 5 or 6 years. And I use Perseus as the example because that was the one I followed most, and I think the chart really shows that that 90% down and then just sideways range trading for 5 years. I thought there's a section in I'm not sure how many people have read this Reminiscences of a Stock Trader, famous book, Jesse Livermore being the sort of one of the most famous traders of the day. And it's about his story, his growing up sort of trading in these, what they call bucket shops, and which was really just a gambling market for stocks without actual ownership of the stocks, but bookies effectively for stock trading. And he talks about this section here, and I've read this book a few times, and I'd highlighted this section for myself, and it talks about a conversation he would hear, but this old trader, this called Old Turkey, and these other traders talked to Old Turkey, and he always just they'd say, why aren't you selling? And he said, well, no, it's a bull market. And they'd say, like, that's this section here, like it has some meaning, and the trader would obviously know it's a bull market if things are going up. And every time he'd have a conversation, he would really just say this, and the traders could never get it. They never really understood what he was trying to say. And what the purpose of this story is really about, the big money is holding the trend as long as you can. Obviously, this market will not be a bull market at some point, and you need, and I plan on taking profits off along the way, and I do. I'm not someone who's full on gold bug holding forever, but this paragraph sort of here, in a bull market, your game is to buy and hold until you believe the bull market is near an end, right? This book's 100 years old, so nothing much has really changed here. But the big money is really holding for the longer term, that medium longer term move, and not trading when you're in a full on bull market, because it's difficult to get back in. You've sort of got this expectation of, oh, I'll buy the dip never comes, and then you struggle with that. So that this old trader that this guy was talking was trying to make that point that, in his experience, you don't want to be getting shaken out, and this book is also where the phrase buy right, sit tight comes from, and it's the same sort of stuff. You don't want to buy right and sit tight, and the time to sit tight, in my mind, is a period we're in now, where it looks like you can get shaken out, and you're still sort of a little bit wary, but all the fundamentals are still very strong economically. So to me, that's the most important thing, and what I'm following. And I think there's a lot of problems that could really come out in the next 6 to 12 months with general economic conditions that should be positive for gold, and by extension gold miners. And I think what Buffett's doing is really showing that he's moving some of his portfolio, even if only it's 0.5%. But if everyone else also moves a half percent of their portfolio into gold equities, that's extreme relative to their, how much have they been owned in the last 5 or 10 years. People have not been in this sector. It's not well followed. It's not well understood. So I think there's money to be made being ahead of that trade. And that's, I talk about ETFs a lot, but as I've said, I think when money comes in here, it will go to the ETFs, because a lot of people don't understand mining companies. They don't understand the terminology, and we're still, if you look at something like, there's all these stats, but the traded market, the market cap of all the gold equities is the equivalent of one Netflix or something stupid like that. Right? This market is incredibly small relative to other sectors that are insanely overvalued and have been running for years, namely the tech sector. We're not anywhere near that in the gold space. So when you start seeing gold equities reports being the first thing you see on every financial news website, maybe we're near the end, but we're not anywhere near that point yet, in my mind. So that's sort of what I really wanted to get on my chest there about trading for the medium longer term. I think holding for that medium to longer term period, and looking for entries. Obviously, that's not financial advice, but that's what I've been doing with my money, and really trying to sort of move away from a trading mindset into a buy and hold. Obviously, with some still tactical and looking around production reports, and whether those production reports, like I've focused on those in the last month, they do set sort of medium-term sentiment. So I look at that a lot, and I think it's important to understand that production. If you have production impacts, your share price will still struggle to run regardless of what the gold price is doing. And we've seen that with stocks like Dacian. They can't go up even though they're we're in the gold bull market, and they're doing nothing because of all their production issues and dilution of the stock. But I think so. You still got to pick the best companies to own, the ones that don't have production issues. But a rising tide will lift all boats. A lot of companies will go up even though they're poorly run. So I'm still pretty bullish even after today, after this week's price action. Like I said, I think odds are consolidation is probably due or overdue now, and historically that's what we have after these big runs. You do see a period of consolidation, so that's what I'm playing for. But I'm still focusing on that medium to longer term trend. And like I said, I think we're only in that kind of fifth innings of a 9-inning game. I probably don't plan on being there in the ninth innings, because that's when it gets difficult. And you could see extreme volatility, and it's you can get shaken out pretty easily. If I did, it would probably be only in a firecracker type stocks that I think have that potential massive upside in a full blow off bull market, if that's where we get to. but I don't want to have all my stocks exposed to the market at that point. I'd be trying to be out of the market. So that's where I'm at with the gold market, and hopefully you got something out of that. And I'll see you next time. Thanks very much.